2021, Bitcoin hit all-time high. I was day trading crypto while working as a software engineer here in Tokyo. I lost money, I lost focus, I lost sleep. It took me losing to learn what actually works for building wealth in Japan. And it's way simpler than you think. Here's everything I learned. Hi, I'm Trunks. I'm a software engineer living here in Tokyo. I share insight about life in Japan, travel discovery, daily life hack, and smart finance tips for expat. If that sounds valuable to you, consider subscribing and hit that like button on this video. In video number 1, I promise I'll tell you what to avoid when investing. Today's that video. We're covering what doesn't work and, more importantly, what does work. Here's the plan. First, I'll share what to avoid, day trading, Forex, scam, and second, what index investing actually is, and third is Japan's tax advantage, NISA and iDeCo, and 4 is the only 3 investment fund you need. By the end, you know exactly what to do. Let's start with my story. Let me take you back to 2021. I was working as a software engineer in Tokyo. I'm making decent money. I actually worked at Money Forward, so I understood personal finance basics, but I had no idea how to make my money grow. Then 2021 hit. Bitcoin all-time high. Everyone is talking about crypto. I actually work on a crypto exchange platform before, and I thought I understand this technology and I have an edge. I didn't. I started day trading, then margin trading, then leverage trading, which basically just gambling. Guessing when it's up and guessing when it's down. I was checking price every 30 minutes during work, after meetings, during lunch, before bed, and the result is I lost my money. But worse than money, I lost my sanity, my energy. I thought I was investing, but it was gambling. And I'm not alone. Look at this data. 90% of day traders lose money in their first 6 months. 80% quit within 2 years. Only 1% can consistently profit. Even professional traders at hedge funds struggle. So why did I think I could do better while working as a full-time job? If you've tried day trading or you're thinking about it, I get it. Work from anywhere, be your own boss, get rich quick. But the reality is, it's take 40 hours a week, constant stress, and you are competing against algorithms and professionals. The odds are not in our favor. Okay, so day trading stock and crypto didn't work. What about Forex? Look at this 5-year chart. Short-term, pure noise. Completely unpredictable. And Forex is even harder than day trading because it's a 24-hour market. It never sleeps, so you also never sleep. And there's no underlying value. Currency don't create wealth, they just move. So what about commodities? Gold, silver, oil? So here's the problem. They don't produce income. A stock pay dividends. A bond pay interest. Gold, it just sit there. Plus storage costs if it's physical, fee if it's paper gold, and the price is driven by fear and speculations, not value creations. Now gold as an insurance, that's different. I'm not saying never own gold, but gold is not an investment for growth. It's a hedge. It protects you from loss. It's different purpose. And for building wealth, it doesn't compound like stock do. And last thing to avoid, if it sounds too good to be true, it is. Red flags such as guaranteed returns 10% per month, no risk, or pressure to recruit others, complex explanation that don't make sense, not registered or regulated. And here's my rule. If someone is selling you on investing, meaning they are making money from you investing, not from the investment itself. Real investment is very boring. Nobody needs to hype it. So if day trading, Forex, gold and scam are out, what do? The answer is so simple and it's so boring. And that's exactly why it works. Let me show you index investing. Before I answer that, let me tell you the 4 things that matter for getting great investment outcome. 1 is starting capitals, how much you start with. And number 2 is your monthly contributions, how much you ate every month. And 3 is the length of the runway, how long you invest. And 4 is the rate of return, the growth percentage. Now here's what blew my mind when I learned this. If the runway is long enough, the starting capital doesn't even matter that much. Even the rate of return doesn't matter if the runway is long enough. So I'm 30 years old now. I wish I started investing when I was 18, and that's 12 years extra on my runway, but I was day trading at my 28 instead. I wasted years, so don't make my mistake. Let me show you what those 12 years mean. If I started at 18 and invested 30,000 yen per month until age 60, and that's a 42 years runway at 7% return, the final value is whooping 85 million. And starting now at 30, just 30 years runway, and the final value is 37 million. Same monthly amount, same rate of return, return. The only difference is times. And that 12 years difference cost me 48 million. That's why I'm making this video. I wish someone had told me this when I was 18. And that's why I'm going to teach my kids about investing from their very early days. Actually, did you know that Japan will soon resume their junior NISA? They used to have that program and they stopped it. And next year, they plan it to bring it back. And that basically tax-free investing for kids from 0 years old. I mean 0 years old. I'll talk more about this in phase 4 video, but imagine you giving your kids a 60 years runway. The compounding would be insane. Okay, so back to the graph. You notice the first 10 years, nothing much happened. But the last 10 years, the growth explodes. This is compounding interest. Your money make money, then that money makes money. This is because that is, and that is because it is. I don't care about your spending, what you do for the month, but just put as little as 30,000 yen into a broad index fund and let it compound and forget about it. And you don't need to find something with 20-30% return. You don't need to do heroic things such as fighting the next Nvidia, the next Tesla, building the next Bitcoin. You don't need any of that. 7% is perfectly fine. With a runway long enough, 7% will get you there. And that's why day trading is unnecessary. That's why Forex is unnecessary. So what is an index fund? Most people think investing means picking individual stocks. Should I buy Sony? Should I buy Toyota, Tesla? And that is gambling on one company. An index fund is different. Instead of one company, you buy all of them, the entire market. S&P 500 equal the top 500 US company. Nikkei 225 equal the top 225 Japanese company. Now here's the crazy part. Index fund beat professional fund manager, active fund, hedge fund over 15 years. These are people with MBAs from Harvard, teams of analysts, billions of dollars, and fancy algorithms. And index fund beat them. Why? One is fee. Professional manager charge 1 to 2% per year, and index fund fee is just 0.05 to 0.1%, and that difference compounds over decades. And 2 is market timing. Professional trying to time the market. They buy low, they sell high, but nobody can do this consistently, not even them. And 3, this is a zero-sum game. They all competing against each other. If one fund manager wins, the others lose. It's a zero-sum game. Over time, the economy grows, company hires smart people, they innovated, they make profit, the economy expands. When you own an index fund, you own all company, so you win regardless of which specific company's success. Apple could fail tomorrow. It doesn't matter. You also own Microsoft, Google, Amazon, and 500 other companies. And here's my favorite parts about index investing. Once I set it up, I don't think about it. I check maybe once a month, and that's it. Compare that to my 2021 day trading experience. Now I have time and energy for other things like this. I'm making videos, my hobby. I'm vlogging, traveling about life in Japan. Time is the most valuable asset you have. Index investing gives you that time back. Now, if you're thinking, okay, I'm convinced, but what about tax? And that is where it gets even better. Japan has 2 systems that let you invest with major tax benefits, iDeCo and NISA. Let's talk about iDeCo first. iDeCo stands for Individual Type Defined Contribution Pensions. It's Japan's version of 401k. And here's why iDeCo is powerful. I will show you an example from the homepage of iDeCo. Let's assume you invest the same amount in term deposit, investment trust, and iDeCo. In each case, you earn interest and investment returns. Interest on term deposits and investment return from investment trusts are taxable, but iDeCo investment returns are reinvested tax-free. iDeCo limits depends on your job. For most people watching this, company employees, it might be from 23,000 yen per month. But this is critical. You cannot withdraw until the age 60. And this isn't necessarily bad. It forced discipline. And my strategy, I think it also makes sense for most people. One is max out iDeCo first. Think of it this way. iDeCo forced you to save for retirement and pay you to do it through tax deductions. Now let's talk about NISA. NISA has two sections. One is Tsumitate, is equal to alt investment, is 1.2 million per year, and that is 100,000 yen per month max. And two is Seicho Toshiwaku, or growth, is 2.4 million per year. So it's lump sum or you manually buy it. So after you max out iDeCo at 23,000 or 30,000 or whatever, and you put your remaining into NISA, Tsumitate. And why is Tsumitate? Because it's an automatically monthly investing. You set it and you forget it. You force discipline. What about the growth sections? You can save that for when you have an extra lump sum like bonus or inheritance or whatever. So don't overthink about it. Most people will never max out Tsumitate, let alone growth. Let's calculate the NISA benefit using our 30 years example. After 30 years, it becomes 34 million yen total value. Tax on growth, usually 20%. So the tax you have to pay is 3.2 million. Tax with NISA, 0. You save around 3 million in tax. That's real money staying in your pocket. However, this is a quick note. If you are US citizen or green card holder, that you have no US tax benefit if you're in NISA, although you get free tax in Japan, but you still have to pay tax in US. This is complex enough that I'll making a full video about it later in phase 4. If you are an US citizen or green card holder, make sure to subscribe so you don't miss that. Alright, before we talk about which specific products to buy, I need to explain something important. In Japan, we buy something called投資信託or investment trust. You can think of it as a Japanese wrapper around this original fund. The investment trust, it buy the actual fund or the stock in that fund, and we buy that investment trust. And here's why investment trusts are more convenient in Japan than buying the original ETF directly. With investment trust, you can invest with exactly a yen amount, as little as 100 yen. Buying original ETF like QQQ, the price, for example, 516 per share, that's around 70,000 yen. You need exactly 70,000 yen to buy one share. If you have 80,000, you can only buy one share and the rest just sit unused. And if you have 60,000, you can't buy any share. While buying investment trust, you say, I want to invest 50,000 yen. The system uses all 50,000 yen to buy a fractional unit. No leftover money sitting idle. Perfect for automatic monthly investing. Okay, so now you understand investment trust. Let's talk about which one to buy. There are thousands of options, but I'm going to make this simple. You only need to know about 3. Let me show you the 3, then I'll tell you which one I personally use and why. First, the IMAX Slim All Country. It holds stocks from the entire world. US, it's about 60%. Japan, Europe, emerging markets, it's everywhere. The fee is 0.05775% per year. It's actually the lowest fee of the 3. The second one is IMAX Slim S&P 500. It's tracked the top 500 US company. The fee is 0.0814% per year. And that is about 800 yen per 10 million yen invested. And the last is SBI QQQ Nasdaq 100. It's tracked the top 100 companies on the Nasdaq exchange. It's heavily tech focused. The fee is quite high. It's around 0.4% per year. Why would someone choose this? You believe tech will continue to dominating. You want aggressive growth potentially. You are okay with higher volatility. But the trade-off is the concentrations equal high risk. In 2022, when the tech crashed, QQQ dropped harder than S&P 500. Also, the fee is 5 times higher than the other two, and over 3 years, that's also compound. So if you're really bullish on tech, this exists. So which one do I use? I invest in IMAX Slim S&P 500, and my reason is because S&P 500 already has that 32% exposure in technology. That's plenty for me. I understand all the innovation from tech company, but I also get healthcare, finance, consumer, energies, and it's all good balance. And S&P 500 has the longest and most proven track records. We have decades of data, almost a centuries, that's showing consistent growth through wars, recessions, and everything. So my advice is to pick IMAX Slim for S&P 500. If you believe in US, you can pick the all country investment trust if you want maximum global diversifications, you want the lowest fee, you don't want to bet on just one country, and pick QQQ if you're very bullish on tech. Again, pick one, commit for 20-30 years, and let time and compounding to do the work. Now before we move on, let me be very clear about something. I'm not a financial advisor. I'm not a guru. I'm just a software engineer guy sharing the experience and what I've learned. This is what I'm doing with my money. But your situation might be different. Do your due diligence. Do your research. Understand these investments yourself. Don't just blindly follow what I or anyone else say. Be responsible with your money, the money you work very hard for. My job is to give you the knowledge and framework, and your job is to make the decision that's right for you. Okay, so now you have all the knowledge you need, but knowledge without actions is useless. Next week, we are actually doing it, and you'll see how to open NISA, how to set up iDeCo, and most importantly, how to buy your first investment trust. By the end of that video, you will be an investor, not a gambler, an investor. And if this video saved you from expensive mistake, hit that like button right now and subscribe because next week is when everything's happened. Thanks for watching. I'll see you next time.